REITs in 2026. A guide for upper-middle-class investors, real estate investment trusts, REITs, are gaining traction as a smart portfolio addition. 2026, offering stability and dividend income. While tech stocks dominated 2025, REITs provide a valuable counterweight to volatile markets, especially for investors seeking reliable returns. Here's what upper-middle-class individuals should know about integrating REITs into their investment strategy. Understanding the REIT advantage, REITs allow investors to own commercial real estate without the complexities of direct property ownership. As John Worth, EVP at REIT, explains, REITs deliver steady income through dividends, competitive performance, and diversification, all without the hassle of managing properties. By law, REITs distribute at least 90% of taxable income to shareholders, often resulting in higher and more consistent yields than traditional stocks. Market trends in 2025-2026. Recent data shows REITs performed strongly in 2025 despite high interest rates. The REIT 2026 outlook highlights solid operational performance and attractive dividend payouts. However, the biggest shift occurred in international markets. While US REITs traditionally led, Asian REITs surged with a 28% return in 2025, followed by Europe at 19.9%, compared to 5.5% for North and South America. This signals a broader trend. Diversification beyond US borders can significantly boost portfolio resilience, hidden REIT exposure, and AMP. Retirement planning. Many investors are already exposed to REITs without realizing it. Over 70% of US pensions include REITs, and more than 75% of large pension plans, $25B+ in assets, hold them. If you have a 401(k) or defined contribution plan, check for REIT funds. Retirement accounts provide a tax-efficient way to maximize long-term benefits from REIT income and diversification. Property class matters just like physical real estate. Location and property type are key. Different sectors, offices, apartments, data centers, react differently to economic conditions. REIT funds, or ETFs, offer instant diversification across sectors and regions, eliminating the need for specialized real estate expertise. Undervaluation opportunity. US REITs are currently undervalued despite strong performance. Net operating income rose 4.7%, and dividends increased 6.3% since 2024. This gap between REIT valuations and broader equity markets mirrors the late 1990s tech boom, where overlooked sectors eventually caught up. Experts predict this gap will close, presenting a potential entry point for investors. Risks and considerations. REITs, like any investment, carry short-term price fluctuations unrelated to underlying property performance. However, they often respond differently to economic forces than traditional stocks, offering portfolio balance. Combining stocks and REITs provides exposure to multiple growth and income sources. Ultimately, REITs offer a compelling way for upper-middle-class investors to stabilize portfolios, generate income, and diversify beyond traditional stock-heavy strategies. The key is to understand the market dynamics, consider international exposure, and leverage the convenience of REIT funds or ETFs.